Friends, let me start with a quick revision with respect to the GST. Friends, before I go ahead, let me tell you that GST as a law by itself, it's a very simple provisions, not at all a difficult provisions of the GST law, but somewhere some little bit of extra attention is required. Secondly, friends, let me tell you that GST provisions has lot of potentials to come in the MCQ category. In other words, friends, because GST is everywhere transaction wise, it is practically like possible to make thousands and thousands of the MCQs as a possibility. In fact, friends, the core understanding, this is what I'm trying to ask, the core understanding of the GST, you have it, then your MCQ issues will become very simple. Otherwise, friends, how much ever you do the MCQs, it will not be sufficient from the examination point of view. And I will keep on telling you and guiding you that which areas of the GST are very prominent to the MCQ material. Okay. Now, let me first of all straight away quickly go and revise section 7. Section 7 is basically your GST supply. GST supply, friends, it's a very simple definition whereby which it simply says that whether you sell, transfer, dispose of, etc. the almost everything that you practically sell it or anything which logically generates revenues to you. In other words, section 7 ultimately says here in this particular situation such as sale, transfer, barter, exchange, license, rental, lease, etc. Almost every probable transaction which can generate revenues to you is to be regarded as a supply. In the accounting language is basically the sale price, or basically in the accounting language it is called as revenue, the gross revenues, whatever that you want to call it as. It is going to be regarded as a supply. This definition of the supply, friends, it is divided into broadly into first 7.1a, b and c, three parts. Okay, these 7.1a, b and C, three parts. All the three parts are, friends, pretty very simple, but they cater to the different situations of the supply. Okay. So, if you see the subclause A, subclause is a very straightforward meaning anything that you sell, transfer, exchange, barter, etc. Whatever you want to say, it is going to be regarded as a supply. That means it will be subjected to the chargeability of the GST. When it comes to the B, it is import of the services. It is import of the services whether or not in the course of the furtherance of the business. That means the test of the furtherance of the business is not a relevant test. And this is the place where, friends, a good MCQ material which can always be said. So ultimately, academically, because we are the people of academic importance, we convert this 7.1a, b and c into a small little table-like format. For example, all forms of goods and services, 7.1a, the test of consideration and the test of business. So these are the two basic tests which is always applicable. But it comes to 7.1b, the test of business is not applicable. That means if it is importation of the services, if it is an importation of the services for a consideration basically means for a price. That means you are importing and you are paying a price for it. In that particular situation, it will be regarded as a supply. In case of subclause C, activities which is specified in schedule 1 made or agreed to be made without a consideration. That means it is something like a consideration less transactions. That means there is basically no sale price in such a situation. There is no consideration received in this particular transactions which is covered by schedule 1. Okay. So schedule 1 is basically your list of transactions where the consideration is not received. That means basically there is no sale price in such a transaction. In that particular situation, so test of consideration is not applicable. However, if you read this particular clause C, this particular clause C does not speak about the test of the business, but when you will go into that particular schedule 1, the most of the transactions are linked to the business. So logically you could say that okay, it is in relation to the business, but under clause C, particularly in the clause number C, there is no test of the business which is specifically provided, and that's the reason this becomes a little bit of a gray area in terms of the interpretation of the GST, because this clause by itself does not speak about whether it should be in connection with the business or not in connection with that particular business. And now the next thing that is required, point number 1, that should be kept in your mind is something called as a schedule 1. Okay. Now this schedule 1 is basically the list of transactions. Those list of transactions which is without consideration but will be subjected to the GST obligations. So this schedule 1, friends, the transaction that has always to be kept in your back memory. In other words, if you are not able to remember this particular transaction, then it could be a little bit of a problem, because GST is everywhere transaction wise. So these are the list of transactions without consideration which will be subjected to the GST, which is to be considered. Now friends, GST Amendment Bill 2018 has made the first ever initial amendment in this particular clause. There is a conceptual impact, but from academics point of view hardly makes a big impact whatsoever. So there was one clause D, listen very carefully. This particular clause D has been removed and that has been substituted with clause 1A. In other words, there is a removal of one clause from subclause 1 and the same clause has been repeated in subclause 1A. It has some very high level conceptual understanding, but hardly makes any big difference from the academics point of view. This particular 1A clause, it is activities or transactions, okay, which will constitute the supply in accordance with this particular provision. They'll be treated as either the supply of goods or services or referred to in this particular clause 2. So this particular schedule 2, this particular schedule 2 is basically the list of the transactions which will either be treated as supply of services or the supply of goods. Okay, so in other words, there are some of the list of the transactions where you don't know whether it is a service transactions or whether it is a goods transaction. That is covered by this particular schedule number 2. So under the definition, you have three schedules. One is schedule 1, other is schedule 2, and there is one more schedule, that is your schedule number 3, that is under the subclause 2, that activities or transactions specified in schedule 3. Okay, these particular activities will neither be treated as the supply of goods nor the supply of services. Then this is a certain type of transaction in schedule number 3 which is neither supply of goods, that means neither supply of services. That means logically this schedule 3 is called as a negative list. Negative list means these are the transactions which are absolutely not chargeable to the GST. I repeat, they are absolutely not chargeable to the GST. So basically there are three schedules. Listen very carefully. Schedule number 1. Schedule number 1 basically tells you that certain transactions which is without consideration but still it is chargeable to the GST. That is one of the schedule. The second schedule is schedule number 2, that is here, which is basically a clarificatory law which says that in certain situations it will be treated as either the supply of goods or it will be treated as supply of services. That means from the rates point of view, that means whether it will be in relation to the goods or in relation to the services, there will be a clarification for some of the borderline situations, and accordingly this schedule 2 will clarify whether it is of the goods or of the services, and schedule 3 is basically the negative list. Now friends, what you have to do it by yourself. Okay, one of the things that you have to do it by yourself, you have to revise schedule 1 and you have to remember that okay, these are the transactions which we normally studied in our regular class, that these are the transactions which are covered by schedule 1, these are the transactions covered by schedule 2, and these are the transactions covered by schedule 3. So the list of those transactions are to be kept in mind in your back memory, and there are a variety of the transactions by itself can be an MCQ. For example, they can tell you that there is a particular transaction which is covered by maybe schedule 1, schedule 2 or schedule 3. That way also MCQs can be said, or there can be some further detailed MCQs on this particular front. So this is a very good MCQ material. So in the revision class, and now I'm not going into the details of each and every schedule because in regular class I've done it in a much more greater depth. So one thing, you can just pause the video if you want. You can pause it a little bit time here and just turn the pages and go through that particular schedule number 1, 2 and 3. Okay, the next thing, which is section 8. Section 8 is basically taxability of composite and the mixed supply. Now friends, what is a composite supply? Let me tell you. A composite supply is a supply where there is more than one things naturally bundled together. That means it is a composite supply where two or more supplies, which is a principal, one of which is of course a principal supply, the main supply, it is treated as composite supply. That means basically it is naturally bundled together. So it is basically one product. For example, mobile and charger. The mobile and charger comes together. For example, if you are buying some digital gadgets, those digital gadgets with the cables and with the charger, it always comes together. So all these situations, friends, for example, if you are buying, say for example, refrigerator, then the trays inside the refrigerator, those plastic trays and etc., sometimes some bottles also, they as a by default they come together. So if it is a composite composite supply, it will be regarded as one supply. And of course, whatever is the principal supply, that is how the classification has to be carried out. What is a mixed supply? The mixed supply is a situation where more than one product are bundled together, but they are not naturally bundled together. So it is basically like a package which may be a tailor-made, but in the industry there is no standard package, something like that. For example, you may say during a festive season, some of the shopping malls will offer you that one television together with one washing machine, or one television together with one refrigerator. Now this package is not normally sold like that together, but during the festive seasons this kind of offers may keep coming in. So in that particular situation, it will be treated as a mixed supply because it is not naturally bundled together, and that is the reason the law clarifies here that whatever is the highest rate. So, example, if I say the television set and refrigerator, so rate of refrigerator and the rate of television set, whichever is higher, this will be treated as a mixed supply, and accordingly the classification and accordingly the GST is to be applied. Now friends, let me tell you that on this particular front, there are a lot of case laws. In fact, the legal updates on this particular front is very, very dramatic. And in the examination condition, friends, this concept can be used in almost every practical situations wherever the valuations can be involved. So if you think that there is a valuations involved anywhere, this particular concept can be built into the system. And the examination condition, friends, the questions can trick you. I mean, see, law is not tricking you, but the examination condition questions will trick you. Now, for example, if I'm selling a product, okay, together with the sale, I am having some packaging material. Together with that, say, for example, for the transportation, there is the insurance, or maybe there is some transportation cost also, okay. This total is, say, for example, sold to you for 150 rupees per piece, for example, okay. So, the sale price of a product with the packing material, with some insurance, the transportation insurance and some transportation costs. So this is how the product has been sold, that it will be delivered to you and this is the amount. Okay. So this entire costs which the seller is recovering, basically, this entire package is normally regarded as a composite supply. So now, in your books of accounts, friends, also there is no need to classify these things separately. That means you have no need to show the revenue on account of sale of goods separately, then the transportation costs recovered separately, then insurance costs recovered separately. So that way there is no need to do that. But and in real life you will not do that also. But in the examination condition, now they will trick you. What they will tell you? They will give you all the breakup. Supposing sale price 100, packing material 10, insurance 10, this is 20 or 30, whatever the balancing figure. And they might also twist the facts, like, you know, it is accounted like that and not accounted like that, and it is shown something like that. Lot of variations they will create in the examination conditions, and you will be confused. You will feel that because it is a separate payment, so I will have to consider it as a separate supplies. So maybe I will classify packing as separate supply, transportation service as separate supply. You will think like that, and lot of variation. And friends, let me tell you, on the composite supply in the recent past, in the GST, there are so many legal updates where so many different industries. One of the very popular case laws in relation to the supply of bus. Now, for example, you are supplying bus and you are also doing a bodybuilding of the bus. That means the bus is supplied separately and the body is to be built on the bus separately. So there could be a person who is supplying bus and together with that they are building body on that. So totally you are getting a ready-made bus, something like that. Okay. So will it be classified as two separate situation or one separate situation? And all these kind of situations, friends, lot of variations have been created. So here one of the point that you have to remember, which is a composite supply. In examination condition, there can be any industry type example which is unimaginary, and you may be required to answer how the classification etc. will be required to be done, or how the valuations etc. will be required to be done. You have to follow the concept of composite supply. And if you think that this is a natural package, that means naturally a industry person will sell it like that, it is to be classified as a composite supply. And if it is a composite supply, there is no need to look into any of the breakups. I repeat, there is no need to look into any of the breakups. You just have to take the total value of that particular package, which we call it as a composite supply, and accordingly you have to do the GST valuations and apply the provisions of the law. Okay. However, what is a composite supply? What I already explained to you is also defined under the law. What is a mixed supply is also defined under the law. And here it is one of the point which I already told you, that it should be naturally bundled. That means more than one things coming to you together. It has to be be naturally bundled, and that means basically naturally bundled also can have a lot of variations. In other words, you have to think about industry. Then how does that particular industry operate? Now, for example, hotel and breakfast. Okay, so if you book some hotel, together with the hotel, the breakfast comes. Okay, now there are some packages in the hotel which is without breakfast also, but it is an industry standard. If it is an industry standard, the hotel package with the breakfast will be regarded as a composite supply, and accordingly you have to do the classification that okay, the total package value, because otherwise if you sit down to do the breakup of breakfast separately and the hotel services separately, it is going to be a very difficult implementation of the law. So this concept of composite supply, it is very simple, but it is very important, and it can have a very good examination strategy to catch you students in the examination condition. Now friends, this is schedule 1. You should go through this particular transaction. As I already told you, these are certain transactions which is without what should I say consideration, but still it will be regarded as supply. So you should go through this. So if you want, you can just pause the videos here, and this material I already given it to you. These are the, I'm just turning this particular pages quickly, and these are all the transactions which will be covered by this particular provision. So schedule 1, 2, 3 is something which you have to just revise it quickly at this particular point in time. Only one of the thing which I want to bring it to your notice, that is your negative list, because I think that that could be a very popular transaction. Otherwise, most of the transaction very simple and straightforward. Okay, one is this transaction which is a sale of land. This is one of the transactions which is a sale of land. So if it is a sale of land, because land is not a goods, this is how it is to be understood. So sale of land is basically in the negative list. That means it will not be subjected to any GST as specifically provided, because it is in the negative list. Okay, and sale of land and subject to clause B of this particular schedule. Okay, schedule 2 paragraph 5b, it is a sale of building. So sale of land and the sale of building is not subjected to GST, but sale of building is subjected to this particular clause. And if you go into the details of this particular clause, the clause says only when the occupancy certificate is already received of this particular building. That means it should be a completed building. So once the building is a completed building, I repeat, once the building is a completed building, thereafter if there is any sale of this particular building, will not be regarded as subject to any GST, because that is into the negative list. However, under construction properties are not covered here. So under construction properties will have the GST implications, but if it is a completed building, because this is the sale of building, but the specified building in that particular schedule is only, and it should be the completed building, which will not be subjected to the GST. Further, in the negative list, friends, the GST Amendment Bill 2018 has already brought in some more extra entries. However, even previously there was some circular and notification clarifications on this particular front, but that is something what is already provided here. That is your entry number 8, the most valuable one. Okay, and entry number 7. Okay, these entry number 7 and entry number 8 are the new entries, where entry number 7 is where there is a supply of goods from a place in non-taxable territory to another person in the non-taxable territory without the goods entering into India. So for example, I am sitting in India, but I have done some trade where the goods are taken from China and sold to Germany. So I will have the transactions recorded in India, but my goods will not enter into India. So I'm buying from China and selling to someone in Germany, and I'm making some profits on that. Okay, so such transactions will not have any GST implication. They are in the negative list, because GST is basically the consumption based story. That means if the GST is consumed, that is the goods are consumed in your territory, then only logically the GST comes into the picture. The another one is clause number entry number 8, where the supply of the warehouse goods, where this is in the customs law before the home consumption. That means in the customs law you have warehoused that particular goods, but it's not cleared for home consumption. So if any such sale, if at all takes place, is not subjected to the GST. Previously some clarifications were there on this particular front. Nowadays the law is very clear that until the goods are cleared for home consumption, the GST implications will not be there as specifically provided by the law itself. Okay, and another is the supply of goods by the consignee to any other person by the transfer of the title of goods which is dispatched from the port origin located outside India, and the clearance for home consumption. This is also a similar situation where any such goods which are into the travel in the sense that from the foreign country it is maybe traveling to India and it is on the high seas, and any such transactions which has already taken place on the high seas will not have any GST implications, because it is once again similar transactions which is into your negative list. So these points should be kept in your back memory as very precisely. Now friends, let us start with discussion and a very quick revision with the levy and collection of the GST. Friends, in the levy and collection of the GST, see, these are first of all the hardcore basic situations in which the basic clarification for CGST also and IGST also purposes which has been provided. Now it says that where there is any supply of goods or services, but except the alcoholic liquor for the human consumption, okay, value which should be determined as per the valuation rules and section 15, okay, in that particular case the GST will be applicable. So first thing is that alcoholic liquor for the human consumption is not covered by the GST provisions right now. That is number one. Second point is the tax on the petroleum crude high speed diesel, basically we call it as a petrol, okay. So tax on petroleum high speed diesel motor spirit, commonly which is known as petrol, these will be covered by the GST only after it has been notified appropriately by the government. So as of today there is no such clarification on this particular front, and that is the reason any petroleum crude high speed diesel motor, basically the petrol, is not within the purview of the GST provisions. So in the GST provision, you can say basically there are two exceptions, and one is the alcoholic liquor for the human consumption, and second one is this particular petrol, and all other goods and services are within the ambit of the GST implications, okay. That is your subclause 1, subclause 2. Now friends, here the basic thing to be noted that this provision which I'm explaining to you is a replica provision in the IGST also and CGST also. So both the provisions that we are revising it very quickly, okay. Now then there is a concept of a reverse charge mechanism, okay. First of all friends, let me tell you what is a reverse charge mechanism. The reverse charge mechanism normally is a levy of GST on certain elements of your costs. See, normally in accounting language, friends, if you understand that whatever that you are selling, basically we call it as a supply, okay. So basically any goods that you are selling or every services that you are providing, basically you are trading profit and loss credit side, okay, which you are basically supplying, okay. On this amount there is a GST, and this is called as a forward charge. This is called as a forward charge, okay. Now there is opposite a reverse charge, okay. There may be certain specified costs. I repeat, there may be certain specified cost. So say for example that certain specified purchases, but not all the purchases, friends, specified purchases, okay. Now this is basically your purchase. On this also you might have to pay GST, which we call it as a reverse charge mechanism, and this is just the opposite of what we call it as a forward charge mechanism. However, this reverse charge mechanism, friends, it is applicable in the GST only on the specified transactions, okay, not on each and every transaction that you are talking about, okay. Now first of all, let me explain the hardcore basic things about the reverse charge. Now see friends, in the reverse charge, this subclause 3 and this subclause 4, okay, these two clauses are directly in relation to the reverse charge. First of all, subclause 3 says that the government, on the recommendation of the council, basically it's the powers of the government, that the government will notify that specified categories of supply of goods or the supply of services, okay, specified categories of supply of goods or the supply of services on which the tax will have to be paid on a reverse charge mechanism. That means some of your purchase items, but the specified categories, not all the categories, which the government will notify from time to time, okay. This will be covered by your reverse charge mechanism. Now see your subclause 4. The subclause 4, first of all, let me tell you, it is a newly introduced provision, and before to the introduction of this clause, there was one old subclause 4, but that old clause 4 has been removed. I'll also tell you what was that old clause and what is that particular removal. But let me first of all revise very quickly the newer provision. The newer provision says that on the recommendation of the council, of course by the notification, specify. Now listen this very carefully. The class of registered person. So now it is a class of person who shall in respect of in specified category of goods or services. So specified class of person for the specified categories of goods or services, or both of course, we will have to pay tax on a reverse charge mechanism. Okay, so now it is a specified class of person with respect to the specified class of goods or specified class of services. You will be subjected to the reverse charge mechanism, and of course everywhere it is by the notification under the GST provisions, and accordingly the GST provision will be applicable. Now there was an old provision which I am telling you just in a very shortcut, but it is removed. Now this provision has been removed because previously it was a very controversial provision. Actually, it doesn't make any sense in studying that, but just for the sake of the knowledge and the information, very quickly, if there was any purchase from unregistered person, okay, that was covered by reverse charge mechanism, and it was lot of subject matter of litigation, and there were a lot of notifications on this particular front. But now that procuring of goods or services from unregistered person, it was one of the concept. I repeat, it was one of the concept, and that particular concept has been removed. It is removed from the levy provision. That means now this concept of procuring and reverse charge mechanism for those purchases from unregistered persons, this concept has been removed. So even if now there is you are having any purchases from unregistered person, it will not be subject to any reverse charge mechanism. Okay, now friends, under the reverse charge mechanism, one thing that you should do very quick revision by yourself here. So that is something which I'm not touching. Okay, see, there are variety of transactions. There are variety of transactions which are covered by the reverse charge mechanism, which also I have explained it to you in the regular provisions and regular classes also. So that is something that you should revise this particular transaction very quickly. Okay, now friends, institute has clarified. Listen very carefully. The institute has clarified. Our Institute of Chartered Accountant has clarified that, see, RCM on goods also is there. RCM specified services is also there. Okay, RCM on goods will not be forming part of your syllabus. I repeat, RCM on goods will not be forming part of your syllabus, and that's the reason, of course, only for the sake of explanation purpose, I have already brought this particular data on the screen and saying that these are all the kinds of goods on which there is a RCM. So if there was anything which was purchased, but it is not part of our syllabus as per the institute guidelines, and that's the reason you people should not study RCM on goods. However, conceptually RCM on goods is also there, and conceptually RCM on services is also there. Okay, now the another thing which I want to bring to your notice here is, there was which I told you, that unregistered purchase was subjected to, in the old system was subjected to RCM from which was purchased from unregistered person, but it has already been fully scrapped. There were variety of the notifications on this particular front. Okay, and it was some delay and always some sort of a confusion. Basically, purchase from unregistered person, which was subject to RCM, but now it is repealed. It has been gone. It has been deleted. That means now there is no, I repeat, there is no reverse charge mechanism with respect to purchases from unregistered person. There is no RCM on this particular front. So there was previously there was a lot of notifications on that particular front, but they are all to be deleted and they are all not to be followed. Okay, so now come to the further part of this particular levy and collection. Okay, now see, under subclause 5 there is one concept of the eco-operator. Okay, now this concept of the eco-operator, friends, this is brought into by the charge, levy and collection. Okay, that certain type of eco-operators will also be subjected to the charge of GST. So this is one type of eco-operator that you have to keep it in your back memory. I repeat, it is one type of the eco-operator. Okay, under subclause 5 it says that government, by recommendation of the council, by the notification, specify the categories of the services. I repeat, the categories of the services on which the tax on intrastate, interstate, etc., which shall be paid by eco-operator, electronic commerce operator. So this is one type of eco-operator which will be notified by the government, of course with the recommendation of the council, because the entire GST law, the backbone of the GST by itself is on the recommendation of the council, that eco operator will have to pay the tax on account of GST. Now there is a specified categories of the eco operator. I'll tell you those specific because the government has notified the type of the eco operator. But before that, you understand this particular levy, and that is your eco supply. If the eco himself is supplying, that means eco operator is supplying, then eco will be responsible. If the eco does not have a physical presence in India, in that case the person representing the eco will be liable to pay the GST. So basically the law is making it very clear that who has to pay the GST. I repeat, who has to pay the GST to the government. So if eco is normally operating in India, eco will pay. That means eco operator will pay. If you do not have a physical presence, then the person who is representing the eco operator will have to pay the taxes to the government. And in any other case, that means if there is nobody who is representing, then eco operator shall appoint a person, okay, and that person will be responsible. Basically, in our simple English, we call it as an agent. Or somebody who is responsible for him, that means the eco operator. So eco operator will have to appoint a person who will be liable to pay the GST to the government. So that is the situation with respect to the eco operator. Now there are few types of the eco operator. I repeat, few types of the eco operator which are specified by the government in this particular regards. Is, one second, let me tell you that particular notification. Okay, and see, here is the notification, friends, and in this particular notification the government has already clarified that transport of passenger by radio taxi, motor cab, maxi cab, motorcycle. Okay, so these kind of eco operators, so somebody like Uber, okay, Ola taxi, Uber taxi, these kind of people will come under this particular category: radio taxi, motor cab, maxi cab, motorcycle. Okay, this has to be eco operator, basically electronic commerce operator. Okay, then the services providing accommodation, hotel inn, guest house, clubs, campsites, other. So basically your what should I say, online booking of hotels and kind of situation will come in this particular category. Further, the services by way of housekeeping such as plumbing, carpentering, etc., where person supplying these particular services to the electronic commerce operator is liable for registration under this particular provisions. And so basically online services of this housekeeping, plumbing, etc. Now these are the type of eco operators. This is a type of the e-commerce operator which will be subjected to GST under the provisions of levy and collection. Now friends, another simple concept of your interstate supply and the intrastate supply. Now this particular interstate and intrastate supply is very, very simple. Now for example, if you are supplying outside the state, that means it will be called as the interstate supply. So in that particular situation, you will have a IGST as applicable. And if it is intrastate, that means if it is inside the state, then you are selling, say for example, goods in the same to same state, then you will have to break up your GST into CGST and the SGST as the case may be. Okay, so this model of intra and inter, this is location of the supplier and all these, this is a technical way of understanding all that thing, is just forget it. It is very, very simple. So because it is two separate states, if it goes from one state to the another state, it is basically the consumption based story. So if it goes from one state to the another state, it will take it as outside the state, basically interstate, and it will have an implication of IGST. And if it is within that particular state, it will have CGST and SGST as the case may be. However, in this particular situation, if there is any import into the territory, okay, if there is import of the goods, it will always be treated as an interstate supply. So import transaction, logically you can also call it as an import-export transaction. That also you can call it as, I'll have no objection saying that. So any import of transactions will be treated as a that means basically if there is any taxes payable in relation to the import of the transaction, you will have to pay IGST. This is what it is trying to just tell you. In other words, practically it is only the classification which is more important, but normally in the GST, supposing the CGST 9%, SGST 9%, so IGST in total is going to be 18%. So that with the payment wise, it will not make a big difference, but the classification of GST has to be made very, very precisely in this particular situation. Absolutely no big deal, and a very, very simple kind of clarification. Okay, now if there is any services which is imported into the territory, that means again it is a kind of an import transaction, it shall be treated as in course of a interstate supply. So it is again the import transaction will be into the, so basically the import transaction will be taken as IGST kind of a transaction. Okay. Now in this particular situation where there is an export transaction located, that means when outside India, that means supply to the SEZ or taxable territory not being the intrastate supply, it will again be treated as an interstate. That's what I just told you. In the simple words, it is import-export transactions which will be treated as your interstate supply of services. Okay. Now, inter and intra definition. Now, inter and intra, friends, definition is just the equal and opposite of each other. So, there is no need to go into the details of that particular situation in whatsoever. Now, here, section 9. This particular section 9 is one extra clarification where there is any supply which is made in the territorial waters. Now, for example, if there is certain services which are provided in the water, or maybe it is provided inside the water. Okay. So, for that, if you want to do any such classification, it says that for the purpose of this, that means what is the state of supply? This is what we want to know, because the GST is more based on the consumption story. Okay. So, where the location of the supplier is in the territorial waters, the location of this particular supplier, or where the place of supply is in the territorial waters, in that particular situation, it shall be deemed to be the coastal state or the union territory, as the case may be, where it is to the nearest point to the appropriate baseline located. Okay. So, if you want to find out that whether it is which state the supply, so it says that supposing if this is your country and if you are making a supply here, so which is the state which is nearest to that particular baseline, that has to be considered as the place of supply. Is a separate clarification on interstate, intrastate provisions of the law. Okay. Further, one more thing which I want to bring it to your notice here in this particular case is the intrastate, okay, or interstate, whatever, where there is any supply which is made to the tourist under section 15, okay, where there is any supply which is made to the tourist. If there is any supply to the tourist, it is again further governed by section, section 15, okay, and mark this particular point as important. Okay. Now, before I just go ahead, the supply to the tourist, let me give you one simple example, which is in Singapore. In the Singapore, friends, they also have a similar GST model. And in the Singapore, say for example, you went to Singapore. Okay. So you went to the Singapore. Okay. So I'm here in the Singapore. Okay. Now I make some shopping, because when we Indians go to the foreign country, we do shopping, right? So I do shopping. Okay. So when I do shopping, I get goods. With the goods, I will get the bills in the Singapore. In the Singapore, friends, now that billing and all that is very transparent. So if even the smallest little shop, you will go and you'll say, give me a bill, they'll give you the bill. Okay. You'll take this particular bill. Now, this Mr. X will be returning from the Singapore. So he will go to the airport. Okay. Now at the airport, you have to show the bill that, look, this is the shopping which I have done, and these goods I'm carrying together with me back to India. That means these goods will not be consumed in the Singapore, but these goods will be consumed back into the India. So in that particular situation, at the airport, whatever tax that you have paid for your shopping in Singapore, you will get a refund back. You will get a refund back because you are a tourist in Singapore. You have done the shopping in Singapore, and that logically those goods that you have shopped, you are going to consume that outside Singapore. So Singapore government should not charge GST on that because it is not consumed in the Singapore. So the tourist will take the refund at the time when that particular tourist is traveling from Singapore to the place outside Singapore. Okay. The same thing is the concept here for the tourist in India, that if some foreign tourist has come to India, the integrated tax, because the tourist is always to be regarded as an interstate supply. So integrated tax, what the tourist has paid. Okay. When the tourist is going to leave from India, so he is going to go outside India for this particular goods, which is taken outside India. This is only for the goods, because goods can only be taken outside India. Now, tourist, if he has already consumed some services in India, that services is not taken outside India. So, logically, this concept applies only to the goods. So, when the tourist is going to go outside India, in that particular case, the whatever tax that IGST that this tourist has paid will be refunded back to him. but it has to be backed by appropriate trail, the documentary trail, that when he might have purchased, done the shopping in India, that particular tourist should have got that GST bill, and it has to be correlated that these goods which he has already purchased, the same he is taking back together with him outside India. So that much of refund that he is entitled to. So this mechanism in Singapore works very well because Singapore's system of GST is highly developed, highly modern. However, in India, I'm not sure whether they are actually giving refund at the airport and whether they have this particular refund counter at the airports or not. I'm not very sure about it, but sooner or later, this mechanism has to be developed that when the tourists take their particular goods outside India, basically it is not consumed in India, and that is the reason they'll be entitled to a refund, and they will get the refund. Normally, these refund counters are at the airport base, and the specified documentation has to be there on the records of that particular tourist. Friends, now let me quickly revise zero rated supply. Friends, the zero rated supply is basically the exports. Okay, so it is a benefit which is available under the GST. Basically, it is an export incentive. Okay, now one of the things that I want to bring to your notice very properly is in the GST, friends, the zero rated supply and the nil rated supply, they are two different things altogether. A zero rated supply, basically it is an export benefit, or it is a benefit with respect to the deemed exports. So either exports or you call it as a deemed exports. Okay, nil rated is basically exemptions. Okay, nil rated is exemption. So nil rated and exemption is the same word. I repeat. So if I say that certain transactions are nil rated, so that is same as certain transactions are exempt. That means it will not have any GST implications. But if I say that certain transactions are zero rated transactions, which means that it is an export incentive, it is an export benefit which is available with respect to the GST transactions. Okay, now these particular exports, friends, see under this particular GST mechanism, these zero rated supply can be the export of goods or of services. So this benefit is for both the goods and services both. Okay, this is export. Okay, and if there is any supply of goods or services to special economic zone developer or a special economic zone unit. Okay, so this is also kind of a export. So if you are supplying it to special economic zone developer or a special economic zone unit, that is also eligible for the purpose of zero rated benefit. That means the same benefit which is available to the exports is also available for the supplies made to the SEZ developer or a SEZ unit. Now friends, a small little thing that I would like to bring to your notice, that export of goods services, basically where you are going to take the goods or going to supply the services outside the Indian territory. That means outside the actual physical location boundaries of the country, it is normally what you call as an exports. But this SEZ, okay, the SEZ is something which is physically not outside India, but it is physically within the boundaries. The landmass is inside India. But if there is someone who is making a supply to SEZ developer or a unit, I repeat, someone who is making supply to SEZ developer or a unit, that will also be covered by the zero rated benefit. That means the treatment will be like an export that this particular gentleman is doing, and that gentleman will get the benefits of the zero rated supply. Now friends, in this particular connection, friends, these two words which you might come across, you call as exports or you call as a deemed exports. Okay, so export is basically like export as actual export. That is basically you take something from in India to outside India, and if you make any supply to SEZ developer or a unit, it is basically like a deemed exports. Okay, something like that. So treatment is the same, but if somebody asks you what is the difference between the exports and the deemed exports, so this is the difference. Now friends, in this particular connection, there are certain benefits which have been given by the notifications naturally, and most of these notifications are linked with your zero rated, because right now we are doing revision only for the zero rated. Okay, now first of all, there is one exemption which is given. It exempts all the goods or the services which is imported by developer, SEZ developer, okay, or a unit. Okay, so goods and services both imported by developer unit, SEZ developer or a SEZ unit. Okay, so there is an exemption available with respect to the IGST leviable under 3(7) of the Customs Tariff Act. That means under the customs law also, whatever the GST is applicable, so from that you are given an exemption
for these kind of operations. However, this particular notification is only for the authorized operations. Keep that in mind. Okay, so this benefit is only for the authorized operation. So each and every operations are not covered here, and generally where you are doing exports. So where it is directly linked with the exports, you will get this particular benefit. Okay. Secondly, friends, there is another exemption. So it exempts, okay, services. Now this is for the services. Okay. Earlier, this particular notification was for the goods also and the services also. Okay, from the Customs Tariff Act. Okay, whatever the exemption. But now it is exempts the services which are imported by a SEZ developer unit. Okay, SEZ developer or a unit in a SEZ. Okay, now of course this is all for the authorized operation from the levy of the integrated tax. That means the import of the services, I repeat, the import of the services done by a SEZ developer or a SEZ unit is also eligible for the purpose of exemption from IGST. So these import transactions also given a benefit for the purpose of exemption from the GST. Okay. Secondly, friends, this one notification I want to bring to our notice is that whatever the benefit which is available with respect to the GST, okay, with respect to the zero rated supply will also be mutatis mutandis apply for the compensation cess also. So if you just remember that at the time of the import of the customs, in certain situations there is also GST compensation cess. So basically this notification is just trying to tell you that whatever is the applicable to the GST is the same thing applicable to the GST compensation cess. So if in this context, if certain exemption benefit is available to GST, is also applicable mutatis mutandis, that means as it is to the GST compensation cess also. And just to further clarify that if there is any refund process which is applicable to GST, will also be applicable to compensation. That means a refund of GST compensation cess can also be permissible. Okay, there is nothing wrong. Further, a government has notified that these are the few situations, okay, which will be treated like a situation of the deemed exports, which in detail I have already explained it to you in our regular class. But however, these are the situations of the deemed exports. Okay, so I'll just take up one particular example. Okay, supply of goods by a registered person to the export oriented unit. Okay, so if I supply any goods to the export oriented unit, this is one of the very good example. So it will be also be regarded as a deemed export. That means that person will also be eligible for the benefit like an export. Okay, so these are some different situations which is already given by the government that will be regarded as your deemed export. Okay, so that's the reason I told you that sometimes some question like export, deemed export, treatment is the same, but what is the difference? These are the few transactions which will be regarded as your deemed exports. Now friends, just come to the computation. In case of a zero rated supply, whatever is the input tax credit which you have used it for the purpose of making the exports, you are going to get a refund. So there is a refund eligibility criteria. Now friends, in this refund there is one rule 89. Okay, in this particular rule 89, that one is a very simple rule, so I will not advise you to go into the technical aspect of that particular rule. But the main thing in this particular rule is, friends, you should know the turnovers. So basically, whatever is your inputs that you have got, input credit basically you have got, that if you want a refund, you can claim it. So for example, if you are 100% export oriented unit, okay, so your 100% turnover is your export only. So 100% input tax credit you will get refund. Okay, so that kind of situation. However, if you are not doing full exports, so you will have to use the proportionate thing. So export turnover divided by the total turnover. So once you know the export turnover, that means a zero rated turnover. I repeat, export turnover means a zero rated turnover divided by the total turnover. So once you multiply the input tax credit with this turnover criteria, then this is the amount of the maximum refund which is permissible because of a zero rated supply. And zero rated supply basically includes exports and the deemed export. Now, one of the point to be kept in mind that this refund is applicable in this context with respect to goods also, with respect to services also. This is one of the point to be kept in mind. Okay, and the turnover criteria, so the turnover definition should be kept in mind, that what is a turnover for this purpose. That's all that you have to remember. Okay, so turnover, once you know, you should know the export turnover, you should know the total turnover. Okay, once you know this particular turnover, multiply with the turnover criteria to the input tax credit and get the amount of the refund which is permissible as per this particular provision. Now friends, there is one clarification from the board, and this particular clarification will require little bit of extra attention. Understand the transaction very properly. Now, say for example, there is a customer in USA. Okay, I am A Limited in India. Okay, I am A Limited in India. Now, this particular customer in US has given me some contract, so I have to supply the services. Okay, so I have to supply the services. So I have to supply, supposing, services worth 100. Okay, so the transaction is that I am supplying the services worth 100, and that US customer will pay me 100. That is one simple plain vanilla situation. So that means what is going to be my export turnover here is going to be 100. Okay, but sometimes it may be possible that I am not able to supply full services from India, maybe because I don't have that much of technical staff, or maybe I don't have that much of skill set, maybe for any other business related reasons. Okay, so what I can do is that I have another person, say for example INC in Mexico, say for example. So I know that particular company, that company can give certain part of the services so that I can speed up the work. So I can tell the MINC that you also provide some services to my customer. Okay, so actually it's a work for 100, but okay, I will provide 60, you provide 40. So at least my customer will get full 100, okay, of the services, and then my customer will be satisfied. Okay, and when I will receive 100 from my customer payment, then I will pay you your remuneration, say for example 40. So this is how I transact. So basically it's my contract for 100, but what I do is I do some international subcontracting, and that another person, I tell him that, okay, you do that particular work. Okay, so that kind of international subcontracting situation comes into picture. Okay, now one of the simplest way of understanding this particular transaction is, that my customer pays me 100. Okay, then I have to pay 40, so I retain 60, and this 40 I pay to the MINC, which is in some foreign country. This is how the transaction is done. So my customer from USA will pay me 100. I will keep my retained earnings. That means whatever is my share, I will keep it, and whatever I have subcontracted, that is a balance payment, I will make it. So in this particular case, how much will be my export of services? My export will be 100. Okay, because that much is the services which I have provided, and what will be regarded as my import of services will be 40. So these 40 will be my import of services, which may be attracting reverse charge mechanism transaction. Okay, so this is a very plain vanilla kind of a transaction. So this will not have any complication. But now the circular was required to answer that, supposing if the transaction is done like this. Now imagine, supposing if the transaction is done like that. I tell my customer that you have to pay total 100. So what you do is you pay me 60, and please make please make the payment of 40 to M. So ultimately you have to pay 100 only. So either you pay me full 100 and then I pass on the money. Instead you pay me 60, and I'm giving you a covering letter. The balance 40 you pay to M. Okay, customer will say sorry. The customer will say, okay, no problem. I will pay 60 plus 40. Finish. Okay. Now the doubts will come. What is my export value, or what is my export turnover? Okay, because I have received only 60. Before I go ahead, friends, the circular has already clarified that, friends, this particular transaction can be carried out, and the way transaction is carried out is also within the RBI norms. That means RBI also permits to make this kind of request to the foreign counterpart, that you make that much of payment to the foreign, like for example, foreign currency expenditure outside India, something like that. So this particular transaction is not something like illegal transaction. It is not something like in violation of the RBI rules. So requesting the foreign customer to make the balance 40 payment to somebody outside India, say for example I am in Mexico, is not in violation of any of the RBI rules, and RBI rules also permits you to do this kind of a transaction. So that is also one more extra clarification. That means don't think that we are talking about something which is very illegal kind of a transaction. No, this is a straightforward permissible transaction provided the RBI rules approval and all that procedures have already been carried out. Now the doubt will come, what will be the export value? Okay. In this particular case, the circular has clarified where this particular transaction with the payment is 60 plus 40, but still the export of services will be regarded as 100. So these will be the export of services which will be regarded as 100, and this balance 40, which is actually the foreign customer has paid to M, will be regarded as the import of services in India. So to that extent, it will be regarded as import of services, and import of services may attract the reverse charge mechanism. It may attract the reverse charge mechanism on that particular transaction. So this particular circular has very boldly and perfectly clarified that no matter how the transaction is done, okay, no matter how the transaction is done, that means whether you have received full payment in India or you have received only some portion of that particular payment in India, your export of services value is going to be 100, okay, in any situation, and whatever is paid to your subcontracted person directly by your customer to that particular person, that much amount will be regarded as your import of services, and RCM provision may apply to that particular transaction. This has been clarified by this particular circular. Further, friends, there is one registration clarification with respect to the special economic zone, that where there is any unit in a special economic zone will require a separate registration. Okay, this will require a separate registration altogether within that particular state also. So say for example India, this is one of the state, and inside a state you have a SEZ. So one unit inside the SEZ you have, and another unit outside the SEZ you have. So this is inside the SEZ and one is outside the SEZ. So in the same state, even if it is in the same state, your unit inside SEZ will require a separate registration, and the unit which is outside SEZ will be also requiring a separate registration under the GST. So unit inside SEZ is requiring a separate registration, where it is within the state you have another unit, so both the units will have to go for a separate. Basically the unit in SEZ needs a special separate registration. That way you should remember from the registration point of view.
Now friends, let us quickly revise the composition levy or the composition scheme. Now friends, as you already know that this particular composition scheme is a simplified scheme for the specified sectors, and it is like easy operations to the GST, and not what should I say, detailed calculations, easy implementation, everything is simple. Okay. Now here in the composition scheme, friends, the basic points that should be kept in very precisely: a registered person whose aggregate turnover did not exceed a specified amount. So your first condition is that your aggregate turnover should not exceed a specified amount. That is one of the first ever condition. That means this particular scheme is applicable for only those registered persons whose turnover is less than the limit. Okay. Now here one of the main point here is, what is your aggregate turnover? This particular aggregate turnover, friends, it is defined under the law, and you have to follow that particular aggregate turnover definition. I will tell you that particular definition in the preceding financial year. Keep that in mind very, very precisely. Now see in the time sequence, when the time is going, say for example this is your financial year, this is the next year, and this is your year. Okay. So if you have to take the decision for the financial year, whether, I repeat, whether the composition scheme will be applicable or not, in that particular case your turnover should be less in the preceding financial year. So your turnover should be less than the limit in the preceding financial year. That means the before the financial year for which you want to take the decision of the composition scheme, and then this particular scheme will be applicable. However, in the financial year, during the financial year, okay, if your aggregate turnover during the financial year, if it exceeds this particular limit, the limit is the same. If during the financial year, if your turnover exceeds, then from that point and onwards, I repeat, from that point and onwards, okay, the scheme will lapse. That means the turnover limit is also applicable
to the current financial year, but it will be applicable on an ongoing basis. So on day-to-day basis, because you will have the total aggregate supply, no? So basically, during the financial year also, your turnover, your aggregate turnover basically should be less than the limit. Here also the meaning is the aggregate turnover. So the turnover limit is applicable not only to decide whether it is a composite scheme applicable or not in the preceding financial year, but it is also applicable, I repeat, but it is also applicable in the financial year. So this is your subclause 3. Read with this particular subclause 1. What is the turnover limit and what are the percentages, etc. I will of course tell you, don't worry about that. Okay. Now, if this particular scheme, that means if this particular basic condition has been satisfied, then you will be paying the tax as per the composition instead of your normal GST working and normal GST calculation. So it will be basically the simplified working. Then the turnover shall not exceed, sorry, the percentage shall not exceed, that means the prescribed percentage at which you will have to pay the composition tax shall not exceed. This is the percentages, okay, which has been provided. But this percentage, that means your GST calculation will be a specified percentage multiplied by the turnover in the state. Now this is another very important point that you should remember in your back memory. See, this is a different turnover, called as a turnover in the state, and in order to apply the test whether composition is applicable or not, you will have to see the aggregate turnover. And so for GST calculation, it is a percentage multiplied by the state. This is a different turnover from the calculation point of view, and the aggregate turnover is a different turnover from the calculation point of view. Okay, so that is one of the first thing that you got to remember in this particular situation. Secondly, now subject to the conditions which is provided as may be prescribed, the government by notification can keep the turnover limit maximum to the extent of 1.5 crore rupees. Okay, so this is the upper cap, but all these limits is of course as per the notification and all that kind. So basically the government has reserved the rights and it has its all the powers to decide whether what is the turnover limit and criteria, but this is a overall maximum limit which will be applicable for the purpose of. However, government over a period I have seen and observed that they are increasing this particular limit from time to time, of course depending upon how the business is growing and what a growth factor in the country is and kind of situation. Okay, now once this basic condition have been satisfied, then one or two things that you should know very precisely, that what is the percentage, of the composition, that is one thing that you should know. What is the turnover criteria, that you should know. I will tell you that, don't worry, in due course of time. Okay, so first of all friends, let me clarify these basic things, that this is your turnover criteria. I repeat, this is your turnover criteria. Okay, now here one of the things that I want to bring to your notice very precisely. However, this is the summarized form of that particular, what should I say, the notification. However, there is one important thing which I want to bring to your notice in this particular notification, although this is a revision class, but okay. Now see, there was one old notification. I repeat, there was one old notification which has been withdrawn by the government. That was with respect to that turnover criteria. Okay, so although it is already removed by the government, but just make one observation I want to do, where the law said that where the preceding financial year the turnover did not exceed, this is old limit, I'm telling you, this is old limit, but I want to interpret something, that's the reason I'm telling you, some 75 lakhs of rupees. Okay, but this is already gone. Okay, then this particular 75 lakhs of rupees through another notification was increased to 1 crore rupees, but this is again gone. Okay, but I'm just telling you why, because there is some interpretation which I wanted to bring up here. Okay, however, in case of preceding financial year, it will be 50 lakhs in case a person registered under following states. Now this is one of the important thing. This was the list of states. I repeat, this was the list of states which was basically your special state for the purpose of composition, for which the lower limit of composition, the turnover criteria was applicable. However, now this entire notification is already gone. It has already been withdrawn by the government. Okay, and instead of that, the new notification has been put. Instead of that, a new notification has been put, and that is, see, in suppression of the previous notification, that means previous notification has already been gone. Okay, where eligible registered person in the preceding financial year did not exceed 1 crore and 50 lakhs of rupees. So now the turnover criteria has been increased to 1 crore and 50 lakhs of rupees for the composition purposes. Okay, and however, it will be 75 lakhs of rupees. It will be 75 lakhs of rupees, which is in respect of this particular list of state. Okay, now the limit has been increased. That is okay, no doubt about that. But the special category of state for this purpose, I repeat, the special state for this particular purpose. See here, there are how many? Total 8 state. Okay, and in the old system, it was how many state? You see, it was 9 states. See here. Okay, in other words, one of the state from this special treatment has been removed by the government, and that could be a catch in the examination condition. See here, it is a 9 states. Okay, so one of the state has been removed from this particular category, and that's the reason I made it very clear now. This is a special state. This is a special state from 2019 and onwards. We have only 8 states. Previously, it was 9 states, total number of that. Okay, and this particular state of Assam, which I have already highlighted, this Assam is now no longer in a special category treatment for the composition purpose. I repeat, baby, for the composition purpose, I am already saying. Okay, and therefore this was a limit of 75 lakhs now, which we have to keep it in our back memory. And for all other states, it's going to be 1 crore 50 lakhs of rupees as per that particular notification, which I already explained that to you. Okay, that was one of the point. The second point is, friends, the rates of composition. The rates of composition now, it has been provided by the government that it will not be as per the notification, because previously the rates were as per the notification. See, I will tell you that particular old notification. See, in the old notification, these rates were specified. See, these rates, but this was all old notification, but this is already gone actually. Okay, so this was already providing the rates, but now the government has clarified that the rates of composition will not be provided by a notification, but will be provided by the rules. Okay, so that is one of the conceptual change, and this is what they have already clarified. The manufacturers which are covered by the composition, now the rate is 0.5%, so it is half plus half. Suppliers, similarly, suppliers which are supplying, which is referred to in this particular clause, which is your clause B of paragraph 6 of schedule 2. This is basically the food supplies, hotel chain, food supplies, etc. So they are also covered by this. Any other supplier eligible for the composition, okay, for them also this particular scheme is applicable. This is basically for the traders. Okay, however, nowadays, friends, in the newer scheme of the composition, even some of the specified services, even the services, but specified the specified eligible, I will say, but because there is some criteria for that, even the services are covered by the composition. And if those eligible services, I repeat, those eligible services which are covered by the composition, then will be covered by these rates of GST. Okay, so now our next point of focus from the composition point of view is that what are those services which can be and which will be eligible for the purpose of composition. Now, if you see here, there are some conditions of the composition. Okay, I'll tell you that which services and all that, don't worry. But first of all, let me tell you some of the conditions of the composition. That means if you do something, then the composition scheme will not be applicable. Okay, now first of all, it says that if anybody otherwise than subclause 1, okay, who is not engaged in the supply of services, will be eligible for the purpose of this particular scheme. In other words, if you are supplying services, normally you are not eligible. I repeat, normally you are not eligible for the purpose of composition, but the specified services are eligible. That's the reason the law says save as otherwise provided, or save as provided in subclause 1. Now in the subclause 1, if you see, the government has broadened the scope of this composition to include the services for the purpose of composition, and that is, see, look at this, where a person who opts to pay under clause A, B or C, this is your A, B or C, okay, may supply the services, So now it is a permitted, I repeat, now it is permitted the supply of services. However, it is only the eligible one and the specified ones, not all the ones, okay, other than those which are in clause B, clause B, okay. So clause B is basically the specified supply of goods which are not leviable under this. So that's not a big thing here other than this particular clause B of paragraph 6, okay, because that is already known now. It's a pretty simple other than the food supplies and restaurants. So naturally the restaurants are anyway covered by the composition. So for the purpose of this discussion, other services only we have to discuss, because restaurant people are anyway eligible for the composition. Okay, so the value not exceeding, now that's a condition. Market is very important, baby. The value not exceeding 10% of the turnover in the state, market very importantly, turnover in the state, okay, in the preceding financial year, or so it is 10% of the turnover in the state of the preceding financial year, that is your monetary limit for the services, or 5 lakhs of rupees, whichever is higher, or 5 lakhs of rupees, whichever is higher. Okay, so if you are providing the services to the extent of 10% of the turnover, or 5 lakh rupees, okay, whichever is higher, okay, whichever is higher, that means maximum supply of services which you can do under this particular scheme is 5 lakh rupees. That way you can say. Okay, so if you are doing it by 5 lakhs of rupees under this particular situation, this is your monetary limit, okay, then you are eligible for the purpose of taking the benefit of the composition scheme. And this particular scheme, if you are taking it, I already told you that this is going to be the percentage for the purpose of which you will have to pay the composition. Okay, so this is a permitted limit for the services. Okay, so to that extent services are permitted. Okay, further, subclause B, these are all basic conditions of the composition that should be kept very much in your back memory. This is clause A, already done. Clause B, he is not engaged in making supply of goods which are not leviable under this particular act. Naturally that composition will apply only for those goods or services which are covered by this particular act. What is not covered by this particular act, then of course this scheme also will not be applicable, not a big deal. Subclause C, he is not engaged in making any interstate outward supply of goods. Interstate outward supply of goods. So you should not be doing interstate supply of goods for this particular purposes. Okay, so if you are doing interstate, you cannot get the benefit of the composition scheme. Then the next point, then he is not engaged in making any supply of goods through eco-operator. So if you are making supplies through an eco-operator, then composition scheme cannot be applicable whatsoever. Okay, further, it makes it very clear where the last point, he is not a manufacturer of such goods as may be notified. So specified goods are not notified. Normally that pan masala, ice cream, etc. are some type of goods which are notified for this particular purpose will not be eligible for the composition scheme. For that, there's a separate summary which I've already given it to you. Further, there is a provision that it says that where more than one registered person are having the same permanent account number, the registered person shall not be eligible to opt for the scheme unless all such registered person opt for this particular composition scheme. So see, basically, if you have your some operation in some different state, because GST is basically state wise, no. Now this particular GST, friends, if you have some different unit in a different state, so more than one registered person having a same permanent account number, that means one legal entity. I repeat, one legal entity. So say for example, there is a company, okay, and this particular company having same permanent account number, you have a branch A and branch, or you can say the division A and division B in a different state. Okay, this is in the state 1 and this is state. So if you want to opt for the composition scheme, I repeat, if you want to opt for the composition scheme, then both the branch has to opt it. Okay, so it is not possible that your one of the division will take composition and another division will not take the composition now. So if you have to take, everyone should be, that means your entire company should be eligible for this particular composition. That means both the division will be eligible, and otherwise none of the division will be eligible. So you have to take the composition scheme, and you of course have to be eligible also for the composition scheme for both the units, and only then you will have to take up this particular composition scheme. Okay, now friends, the next thing which I want to quickly revise here is, see, I told you that these are the type of goods and etc. which are not eligible: ice cream, pan masala, tobacco items. Okay, they are not eligible. Now the next thing here which I want to bring to your notice is this meaning of the turnover, and here oftenly the students can do a lot of mistake here. Although this material I already given it to you, better revise it by yourself also, but let me give you the key highlights. This is the definition of the aggregate turnover. An aggregate turnover definition, friends, it is used oftenly at many places. I repeat, at many places under the GST law. That this particular aggregate turnover, I repeat, this particular aggregate turnover means the aggregate value of all the taxable supplies. Correct? First of all, it has to be computed on all India basis. First of all, it has to be computed on the all India basis. So for example, if you are one company, you are having different division in the different states, you have to consider this aggregate turnover means on all India level basis, you will have to calculate the turnover. Further, excluding, so there is one specific exclusion, okay, the value of inward supplies on which tax is payable by a person on a reverse charge mechanism. So your inward supply reverse charge mechanism, whatever is the turnover, that has to be excluded. Now you see this reverse charge mechanism, okay, inward supply is not included for the turnover calculation, which I already highlighted. However, if it is a reverse charge mechanism on the outward supply, then it is covered by the turnover calculation. So it's basically, now for example, you see the legal services. The legal services, okay, so legal services, if they are provided on an outward supply basis, for example, you are a legal firm and you are providing this legal services, and so that is our outward supply, okay. So for that purpose, the turnover will be included. The turnover, it will be included in the meaning of the turnover, okay. However, supposing if I am a manufacturing company and if I have a legal service and if I have that particular expenditure on which the reverse charge mechanism is applicable, so if there is a legal charge or legal services on which RCM is applicable on inward basis, this is on the inward basis, okay, that will not be covered by the turnover criteria, okay. So your inward RCM, I repeat, your inward RCM is covered by the, excluded from the definition, and your outward RCM is covered by the turnover criteria, which I have already brought to your notice, and it is already highlighted. RCM here, see RCM here, okay, fair enough. And further, all taxable supplies, excluding that inward RCM, that was one of the point. However, it will also include all your exempt supplies, export of goods or services or both, interstate supplies of the persons having the same permanent account number, okay. So it includes all your, this is a aggregate turnover definition, because this is a general purpose definition under section 2 of the GST. It will include your exempt supplies, export of goods or services, or even if there was any interstate supplies having the same permanent account number between these particular persons, then also it will be subjected to the aggregate turnover calculation. So exempt, exports and interstate, everything is included for turnover calculation. This is only for the turnover calculation, okay. Further, it shall exclude all the central, state, union, territory and integrated tax. That means it should be excluding the amount of the taxes, okay. So turnover figures are not inclusive of the GST, but it has to be exclusive of the GST, okay. So remember all these things very, very precisely. See, this I have already noted here. It should be excluding GST, and it has to be calculated on a all India level basis. Now some students sometimes get confused and they ask, that look at this, supposing there is any interstate supply, then the composition scheme only is not applicable. Okay, very, very, very fair enough. However, this aggregate turnover definition is just the simple definition under section 2. So logically, if you interpret this aggregate turnover with respect to composition scheme, then logically interstate supply of goods should not be there. Logically, it should be like that only. But then you don't mix yourself, don't confuse yourself. Oh, this aggregate turnover definition is only for composition purpose. Nah, this definition is not for only composition. In fact, this aggregate turnover definition, friends, it is applicable in many, many different scenarios under the GST. It is just the hardcore basic definition under section 2, which is also useful. I repeat, which is also useful for the purpose of composition scheme, okay. And the next thing that I want to bring to your notice is the turnover in the state definition. Now turnover in the state or of course a state or the union territory. This is also on a similar lines only. This is also on the similar lines only, on a similar basis only. So I'm not repeating. But here now remember that for the composition, the percentage will be multiplied with the turnover in the state. Okay, so there are two separate turnovers which are used for the purpose of composition. Remember, in order to apply whether composition scheme is applicable or not, it is aggregate turnover. But to calculate the tax liability, the amount of the tax liability, the turnover which is used is turnover in the state. I will once again repeat and bring it to your notice very, very precisely, because students do this particular silly mistake. See, a registered person whose aggregate turnover in the preceding financial year is blah 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 blah. So that is aggregate turnover for one purpose. And for the percentage tax liability calculation, it is turnover in the state. See, this is turnover in the state. Okay, so basically it is on a similar lines only, but aggregate turnover is on a similar lines but calculated on all India level basis, and turnover in the state will be basically with respect to those transactions in the state, and accordingly you will have to calculate this particular tax liability. Okay, now friends, there was one particular notification on this particular front that also I want to bring it to your notice. However, now with the introduction of that limited services, this particular notification has become little bit, what should I say, little bit redundant, but anyway it is there on the statute record. So let us do that particular point also very precisely. Okay, now further it says that for those people who are covered by clause B part paragraph 6 of this is basically your food supplies, basically restaurant people. Okay, this particular food supplies, okay, and also supplies any exempt services. They are also supplying some of the exempt services, including services by extending deposit, loans, advances, etc. kind of situation. Okay, so basically if these restaurant people had some financing transaction, I repeat, had some of the financing transaction in form of the exempt services, then this particular notification has already clarified, and they have got any interest or discounts because of this particular financing transaction, the person shall not be ineligible. The person shall not be ineligible. That means this person will be eligible. So this type of person will be eligible for the purpose of the composition scheme. So basically there is no harm in having these financing transactions in this particular situation. So if you have the financing transactions and if you have any considerations in form of interest or discounts, then you are eligible for the purpose of composition scheme. So simply this particular notification has clarified. I once again repeat that you shall not be ineligible. Logically you will be eligible for the purpose of composition scheme. Okay, now and also there is one more clarification here, that is in computing the aggregate turnover in order to determine this eligibility for the composition scheme, the value of supply of any such exempted services, including services of extending deposits, loans, etc., okay, by way of interest discount, shall not be taken into account. That is your aggregate turnover criteria. Where is it gone here? See this point. Your aggregate turnover criteria shall not include this kind of exempt services, basically your interest and discount type transactions will not be covered in calculation. I repeat, it will not be covered in calculation for the purpose of your aggregate turnover. Now friends, one question that we had already solved in our regular class, I want to quickly revise that particular question and want to bring it to your notice that how exactly this particular composition scheme will apply. Now friends, in this particular question, it was a situation which was given like there is one taxpayer, and that particular taxpayer is given an alternative whether you take the benefit of the composition or you not take the benefit of the composition. Now supposing if you take the benefit of the composition, let me focus directly on that. Okay, now supposing your sales was 60 lakhs, okay, and the GST on sales was this figure, but normally friends, if you are covered by the composition, you are not allowed to collect the taxes, okay, and you do not even get the input tax credit. So neither you can collect the tax nor you can what should I say, get the input tax credit. So your sales is 60, that is an illustrative thing. Okay, now against the 60 you are going to have your purchases, say for example this 50. So your purchase is 50, Okay. Now, when you are having this sale purchase, whatever that purchases that you are doing, that particular purchases, friends, on that there will be a tax, because the person who has already sold you, he's not going to give you tax free, he is anyway going to charge. Okay, so your purchase, okay, on that particular purchases, say the GST is 5%. Okay, so this is your input tax which you have to pay, but you will not get a credit for this particular amount. You will not get a credit for this particular amount, but you will of course have to pay. So it is going to be your cost basically, and you have to pay that particular money, and you are not going to get any input tax credit for that particular money. Okay, this I have already noted, and this is the main point. And on the 60, you cannot even collect, I repeat, you cannot even collect your GST, not to collect, nor you will get the input tax credit. So whatever is the other data, like your general expense and your accounting record and whatever the cost etc that you have, okay, so that you have to take into account. And now on this particular 60 lakhs, you will have to pay the composition. Okay, so assuming that the rate of the composition, whatever as such as may be applicable, okay, effective rate. Now the rates are as per the rules only, so don't go with all these rules and all that. Okay, so the percentage will be as per the rules, and follow that particular rule, and accordingly you calculate that particular percentage. So on 60, I'm assuming that it is 1%, so it is assumed. So this is your tax on account of composition, and you're not even going to get any input tax credit, and this is going to be a net profit, and this is how the calculation will have to be carried out. Okay, however, friends, supposing if you are in the normal scheme, how the things are going to be different. See, on the 60 lakhs, you are also going to collect the input, you are also going to collect the GST, where you are a registered person, because all these things is only for the registered person. Okay, so on the sales, you are also going to collect your, what should I say, taxes. Okay, so it will be 60 plus taxes. Actually, I have not reflected here, but that is okay. Because this is not that full computation of the P&L. This is only the representation of that particular thing. Okay, so these 60 lakhs, okay, fine. So you can say that this 60 lakhs inclusive of taxes, you can say like that, or if you want to say further you want to charge, because see, this is a common question, no, for with composition and without composition. That's the reason you could assume it either ways, or if you say that the 60 was excluding, then you were to include, or whatever that you want to say. But basically you will take the sales figure in which you will have that particular taxes, accounting cost, general expense. Then you will, on the purchase, you are going to pay the tax, that is your input tax. On this, you get the credit. Okay, you are going to get the credit on account of this particular figures. Okay, now once you get this particular credit, you are going to get the credit. So on 60, whatever the taxes are there, okay, so that you have to do the calculation, which in our normal class I had already done it, minus this 2.5, which is the credit. You will have to pay the net GST. You will have to pay the net GST after taking that particular credit, and you are going to get the profit and loss. So this is how it is going to be different with respect to your tax calculations with respect to the composition. And this point, friends, I just want to bring to your notice here. This thing which I want to bring to your notice, you see it is already provided here also. A taxable person shall not collect any tax, from the recipient on the supplies made by him, nor shall be entitled to any credit of input tax. So neither you can collect the tax, nor you will be eligible for the purpose of input tax credit. Okay, that was one of the clause which is kept in mind from the composition point of view. Now, friends, the government has already come out with similar to a composition scheme. I will just call it as the composition scheme version 2 for those people who are not covered by section 10. So for those people who are not covered by section 10, basically the composition scheme, the government has come out with a notification saying that we want to extend some benefit to even the other persons who are not covered by section 10, but it is subject to condition. Friends, this particular notification and the application of the scheme is very much similar to the composition scheme only. So there is no need to go into some extraordinary details of this particular what should I say, the notification, because application what is banned are the same, but the main highlights which I want to just give it to you. Now, first of all, this particular scheme is applicable to a registered person who is not eligible to pay tax under section 10. That means those people who are not covered by composition, those people can only be covered by this particular composition scheme. That is number one, very important thing. Second point is that this particular scheme, the rate provided 3%. Okay. Further, the supply of goods or services or both. So here this particular scheme is applicable with respect to goods also. It is with respect to the services also. Both. Okay. Up to the aggregate turnover. Up to an aggregate turnover on of aggregate turnover of 50 lakhs of rupees. I repeat, 50 lakhs of rupees made on or after the 1st of April in any financial by the registered person. So it is basically for those persons whose turnover aggregate up to is rupees 50 lakhs, and it is applicable for goods also, and it is applicable to services also. So this is your 3%. Okay. And see here also it is mentioned the aggregate turnover in the preceding financial year was 50 lakhs rupees or below. Okay. So basically here the turnover criteria is 50 lakhs of rupees. Okay. Further, one of the very important thing, otherwise this is very, very simple, who is not engaged in making any interstate supply. Okay. In other words, the interstate supply is not eligible. I repeat, is not eligible for the purpose of this particular notification. I just call it as a composition scheme version number 2. So intrastate supplies are not covered. So logically, it will be only for the intrastate, which I already mentioned in the heading, but this is only a logical conclusion, friends, in this particular situation. Further, there are some other conditions also. These are all some of the other conditions, but it is pretty simple and easy manageable. So I'm not spending a lot of time on this particular front. Okay. And there is one little bit of extra point which I want to bring to your notice. Okay. It is on the first supply of goods up to aggregate turnover. Okay. So it is basically on the first supply of goods. So basically, if you say your previous year, or if you say your financial year, when you start doing the business, this is all your first supply. So you have to just keep on applying this particular scheme until you don't cross this particular limit, which is a turnover character. That's a simple logic of this particular provision. And of course, which should start from the 1st of April, because financial year in India starts from the 1st of April. And this particular explanation basically clarifies what is the first supply of goods. But it is the same simple definition which I have already explained that to you. It is a no big deal whatsoever. So this is basically a special composition, or you can say composition scheme version number 2, which is with respect to your goods also, and which is with respect to services also. This is the rate, and this is a turnover criteria. Okay. And logically, intrastate supplies are not covered by this particular scheme. So basically, only the intrastate supplies are covered by this particular scheme. That was a logical criteria and conclusion applicable for goods also, and it is applicable for services also. Friends, the nil rated transactions, or it is also called as the exempted transactions. The specified transactions through the notification, there are many transactions, friends, in this particular topic. The one thing, let me tell you that before the examination, just have a glance of this. I mean, and this can be some 4 or 5 mark question. Some specified transactions, they will pick it up from the list of nil rated transactions, and they might ask you some couple of questions. However, I will just take up some of the few important things as a matter of analysis, but you should take out some little bit of extra time and go through all the entries at least once that which are in the exempted category. Now, one thing, friends, see, first clarification is that nil rated is a different entry in the GST, and the zero rated is different. So don't confuse. The nil rated is something what we call it as a exempted supply that is covered by specific exempt notification. So nil rate and the word exempt is one and the same. Okay, there is no difference between these two words. If somebody will say exempt supply, it is same as nil rated supply. Why? The exempt supply, basically the word which comes from, see this particular section 11, where it says that whether government is satisfied it is necessary in the public interest so to do, may exempt generally. So this is the word exempt comes from the section of the CGST and the appropriate section in IGST also. but the word exempt comes from the law, because law uses the word exempt. So we say that this is a exempt supply. But if you will see this particular notifications, friends, in the notification, there are these columns like this, it has been given, and in the rate they said that this is nil. Okay, so from that exempt notification, the word nil comes into picture, and this is how the nil rate has become famous. Okay, so either you call it as an exempt or you call it as a nil rate. It is one and the same. Okay, so don't confuse yourself that nil rate and exempt, what is the difference? And they are one and the same. However, the zero rated is different. A zero rated is basically the export benefit, or zero rated can also include deemed export kind of a transaction, and accordingly this particular provisions is to be applied with. Okay, now friends, let me take up some of the important analysis of some of the important points which may come into the picture. Okay, and for the quick revision, let me take up some of the property related transactions first of all. Okay, now in the property related transactions, friends, first of all, what is important is your cutoff date for the purpose of analysis, that is your completion certificate or the first occupation, whichever is earlier. Okay, so this is one of the standard language which is used in many of the GST provision, that in relation to the property, this date or this date, whichever is earlier, and the entire consideration is received before or after kind of situation. Okay, so two words, two phrases that you should remember from the GST point of view, because this is a very common phrase applicable in many of such property related transactions. Okay, one is a completion certificate date or first occupancy date, whichever is earlier. So this is one language. Okay, completion certificate date. Okay, or its first occupation whichever is earlier. Okay, so this is the cutoff date that you should remember. And now friends, the first complete analysis that I want to take is a property sale transaction. Okay, so say for example, there is a developer, that is a builder who is developing the property, and I am the customer, I'm a flat buyer. Okay, let me say I'm a flat buyer. So what will be the tax burden with respect to the property transaction which is in the hands of the flat buyer? Now, supposing the flat buyer buys the under construction property. Okay, that means I am buying the property before the cutoff date in my timeline. Okay, so before this cutoff date, if I am buying this particular property, but when I am buying it before, the technically law says that the entire consideration, listen very carefully, the technical language used by the law is that the entire consideration, in fact this particular is the extract from your schedule 2 and the supply of services. Okay, the entire consideration should have been received before, because the test which is provided here is everywhere entire consideration. Okay, so supposing if I am a flat buyer, listen very carefully. Okay, supposing if I am a flat buyer and if I have received the if I have paid the entire consideration, that means the builder has received entire consideration, whichever way you look at it. Okay, so if I am buying it under construction, okay, then the GST burden will be applicable on the flat buyer under construction property. But if the property is already completed in terms of the construction, and if I buy a ready flat in the sense that where the completion certificate or first occupancy have already been done, and if I buy the flat or the property after the cutoff date, and whenever I say I buy after the date, you should have in your back memory the entire consideration should have been paid afterwards. Okay, so either the entire consideration is before or entire consideration should be afterwards. Okay, that is one situation. If there is a part consideration which is made before, listen very carefully, in that case it will be regarded as your under construction property transaction only. Okay, so if I want to say for example that I am buying a ready flat, it means that I am paying entire consideration after the cutoff date. Okay, now in this particular case, if I am buying under construction flat, then for the flat buyer, that means myself, there is a GST burden. But supposing if I buy a flat where the entire consideration is received by the developer or the builder, okay, is also sometimes called as a promoter, okay, under the RERA, because there is a RERA law nowadays. Okay, so the entire consideration is received after the date. In that particular case, there will be a no supply of services and there will be no GST burden on the flat buyer. There will be no GST burden on the flat buyer. That means on the flat buyer, the GST burden will be there only if there is a under construction property, and if the ready flat has been transacted, then there is no GST burden with respect to the flat buyer. Okay. Now, put it differently. Understand this part of the provisions little bit technically, very properly. Schedule 2, subclause 5. These shall be regarded as a supply of services. Okay. The following are the transactions which will be regarded as supply of services. Any construction of a complex building, civil part thereof, including complex building intended for sale to the buyer, wholly or partly. So any of the property transactions, okay, wholly or partly, except the following. Okay. So normally wherever there is any property transaction, it will be regarded as a supply of services. Because this is supply of services, because you are getting services in relation to the construction and basically under construction property. Okay. But so this will be regarded as supply of services, except where. So this is the exception. Okay. Where the entire consideration has been received after the issuance of the certificate or the first occupancy, whichever is earlier. So if the entire consideration is received afterwards, then it is not a supply of services. That means it is not a supply of services, means it will not be subjected to any GST burden on this particular situation. Okay. Now, the second point here is in connection with that. Now, the same thing, supposing if I said that the part consideration is received before and part consideration is received afterwards, that means the entire consideration, that means it will not be covered by this exception. The entire consideration is not received afterwards. In this particular case, there will be a GST burden. There will be a GST burden, and it will be regarded as supply of services. It will be regarded as the supply of services. Okay. And the GST burden will be there on the buyer of this particular transaction. Now, it is very natural thing that although you will say that I am paying 60 before, that means I booked under construction flat, so I paid 60 before and I am paying 40 afterwards. But the GST burden will be on the entire amount, 60 plus. That means basically on the entire contract. Your contract is basically a buying of a property. So entire property transaction will be subjected to the GST burden where the transaction is done for the under construction of the property. Okay. That is two things that you got to remember very properly. Okay. The next thing, friends, which I want to bring to your notice is basically one clarification through the circular. Okay. And this is basically in relation to the tenancy transaction of a property. Now, friends, in the tenancy transaction of a property, it is basically the rights of occupancy into the property, and the tenancy law is also governed by the state government, and many of the state government has already incorporated this kind of a tenancy provisions. So I have a right to occupy a property. Okay. So ownership means you become owner of the property. Tenancy means you are not the owner of the property, but you have a right to occupy that particular property over the period of that particular tenancy. Okay. Now, in the tenancy transaction, friends, there can be a sale of tenancy rights. See, normally when you sell the property, it is a sale of property agreement. But now in the case of tenancy, it will not be the sale of property because you are never the owner of the property. The owner of the property is a landlord. So there will be a tenancy transaction and there will be a transfer of money because of the transfer of rights, which is called as a tenancy rights. Okay. Now, in this particular context, friends, first of all, you have to remember that there is one exemption entry number 12, and that says that any services by way of renting of a residential or a dwelling for the purpose of residence. That means any rent of a residential property is given an exemption in the GST. Okay, that is one of the points that you should remember. Now, if there is any tenancy transaction, friends, you pay the money in lump sum. So first of all, you have to think about a residential property only, because this exemption entry number 12 is basically renting of a residence. That means for the residential purpose only, it's covered for the purpose of exemption. So if there is any transaction of tenancy which relates to the commercial property, then of course it is subjected to the GST. Okay. So the transfer of tenancy rights is not the transfer of the property. That is the first thing that you have to remember. And the transfer of these tenancy rights, if it is for the commercial property, will be fully subjected to the GST. And this is one of the points clarified in the circular also. The transfer of tenancy rights to the new tenant against the consideration is always taxable. So basically it is like your commercial property tenancies, of course, transfer of rights basically, and it will give rise to the GST implications. Now friends, let's think about the residential property transaction. Okay, so there is always in a tenancy transaction, there are three people involved in the transaction. Normally when you sell a flat or sell a property, there are two people involved, seller and the buyer. But in case of a tenancy, there will be always three people involved. Okay, what are those three people? One is a person who is already inside that particular property, that means inside the house, and he is going to transfer the rights. So basically we will call him as a outgoing tenant. We will call him as a outgoing tenant. And instead of outgoing tenant, a new person will come. We call him as a incoming tenant. Okay, so the old person who had taken the property on rent is going, and instead of that, the new person is coming, and the owner of this particular property is a landlord. Okay, so landlord is also involved in this particular transaction. So understand first of all that the incoming tenant, because he is coming inside that particular property, he will pay some fixed amount. Okay, say for example he is paying 100. Okay, and out of the 100, the 70 is being paid to the outgoing tenant because he is going to vacate the house, and the balance 30 is paid to the landlord because landlord is accepting you for the purpose of that particular tenancy. So now it has been clarified by this particular circular that whatever is a transaction between the landlord and this particular tenant, okay, this particular transaction, okay, so between these two people, whatever is the transaction, this is basically for the granting of a residential accommodation. I repeat, this is basically for the granting of a residential accommodation. However, this particular transaction is for the transfer of rights. Basically, it is not a rent. Okay, so the rent is basically per month what you pay. Okay, however, this tenancy rights is basically a lump sum payment that you make, basically for the transfer of tenancy. Okay, so there are two separate transactions. The first doubt that should come into your mind, that because it is not a rent transaction, should it be subjected to the GST? Have you understood that? Because the rent of a tenanted property is a different figure. It's a very nominal figure, few hundreds of rupees depending upon the value of the property, because rent is governed by the Rent Control Act. And the transfer of the tenancy is a lump sum figure, and it's a very handsome figure, and which is also correlated with the value of the property by and large. Okay, so the circular has first of all clarified, okay, what the circular has clarified, okay, and a very good clarification, where there is any grant of tenancy rights in a residential or a dwelling for the use as residence. Don't forget that these all benefit is only for the use for the residence. I already told you that had it been any commercial property transaction, whether commercial property rent or commercial property tenancy, is fully taxable in the GST. But this is all for residential that we are talking. Okay, for the use as residence, as a dwelling against the tenancy premium. Look at this, against the tenancy premium. So the lump sum figure, what I'm telling you, is called as a tenancy premium. Okay, or the periodic rent. So at the time when you are accepting in the tenant, you are taking a premium, that is one X amount fixed. It's a very handsome amount, and once he becomes your tenant, you charge him periodic rent, which is X amount per month. Okay, so even the premium is covered and even the periodic rent is covered, or both is exempt. And this is one of the magnificent clarification. This is one of the magnificent clarification from the tenancy point of view. Look at this. Okay, against the tenancy premium or the periodic rent, or both will be taken as exempt. Both will be taken as exempt. Okay, so any transaction which is done, I repeat, any transaction, because only the landlord can accept the incoming tenant. No, so any transaction which is done between the landlord and the incoming tenant. Okay, so why is landlord charging you some money? Because landlord is accepting you as an incoming tenant. That means to accept you as a person for the residence into this particular house, I'm charging you premium. So he is charging you premium. Okay, and plus he may charge you fixed periodic rent. This is a normal feature of the transaction. So in my example, if I told you this 30 lakhs of rupees, it was in nature of a premium. And plus, once you become a tenant, thereafter he will charge you periodic monthly figure. We call him as a rent. So this whole transaction will be covered by the exemption provision. Okay, and this is your entry number 12, and which says that services by way of renting of a residential dwelling for the use as residence is fully eligible for the purpose of exemption in the CGST notification. Okay. Further, friends, this particular transaction in real life can be done other way around also. See, ultimately, just imagine a transaction, because practically people do the transaction in different ways. Okay, now incoming tenant had to pay total 100, say for example. So 70 is paying to outgoing tenant and 30 is paying to landlord. This is how he's making 100 payment, because the payment will be made by the incoming tenant, because he's basically a person acquiring the rights. Okay, so now the incoming tenant pay 100. Now full 100 he make payment to the landlord. So I make the full payment to landlord 100. Okay, and then the landlord will pay the another person that now you are vacating the house, so I pay you X amount. Okay, and say for example that amount is 70. Okay, so these transaction between the landlord and the incoming tenant, because this is for the residents, so this will be exempt. These will be exempt from the purpose of GST taxation point of view. That means it will be the supply of services with respect to the residential accommodation. Okay, so this is how you have to understand. Okay, however, in any situation, if there is any transaction, between the outgoing tenant, and this particular person, if there is any transaction between these two persons, or if there is any transaction between these two persons, okay, depending on the situation how the transaction was actually executed. So outgoing tenant, okay, receiving the money from incoming tenant, that is one way of a transaction. Okay, or outgoing tenant receiving money from the landlord, this kind of a transaction. That means any transaction which is done with the outgoing tenant will be taxable to GST. I repeat, it will be taxable to the GST. In other words, whatever money that outgoing tenant receives for the purpose of surrendering his tenancy rights will be amounting to the supply of services, and accordingly it will be chargeable to the GST. So I once again repeat, as a matter of conclusion, friends, any transaction which is done with the outgoing tenant, this particular person doing any transaction, okay, because why is this person going to get some money? He is going to get the money. Either he get money from one person or the another person. Why does he get the money? He get the money because he is surrendering his rights. Okay, because he is supplying his services. Okay, so that transaction will be subjected to the GST mechanism. Is that very much clear? Okay, so this was with respect to the property transaction. Now friends, with respect to the property transaction in case of a builder, okay, or a developer. Now sometime back, friends, I have already summarized to you very properly. See this particular thing which I have just put it into the what should I say, a diagrammatic form, just for an understanding purpose. If there is any property which is sold before the completion certificate, if there is any property which is sold, that means under construction property, then the GST burden is on the flat buyer, that we have already studied. Okay, and it is very naturally that if the property is sold after the completion certificate, then there is no GST burden on the flat buyer. So from the flat buyer point of view, the position is very clear. From the flat buyer point of view, the position is very clear that if it's a ready flat and the entire consideration is paid afterwards, for him there is not going to be any GST implications. Okay, but if there is a under construction property and if I buy that particular flat, then a flat buyer and the builder transaction will be subjected to the GST implication. Now think about from the builder point of view, from the promoter basically under the RERA. Okay, so now think about from his point of view that what will be the implication. Okay, now if the property is sold before the completion certificate, okay, if now it is from the builder point of view, developer point of view, if the property is sold before the completion certificate, okay, in that particular case, flat buyer has already paid the full GST, and that's the reason there will be no GST on FSI, TDR, or a long-term lease of the land. Okay, so on that particular property transaction, there will be no GST burden on the hands of the developer or the promoter, where the property is sold before the completion certificate. So where under construction property, the entire burden for the GST is basically on the flat buyer. This is how logically you should understand. And because the entire burden is on the flat buyer, there is no burden on the promoter. Is that clear? Exactly opposite. Okay, and if there is any property which is sold after the completion certificate, Okay, that means now the flat buyer will have no GST implication. In that particular case, for the promoter, that means the developer or the builder, there will be a GST burden on the FSI, TDR, or a long-term lease of that particular promoter. Okay. So what is the conclusion? Logical conclusion. Okay. See, in the time sequence on the cutoff date means a completion certificate or the first occupancy, whichever is earlier. Okay. On the cutoff date, if there is any unsold flats, understand this very carefully. It's a very logical statement I'm making out of the GST provisions. If there is any unsold flats, basically residential flats, okay, if there is any unsold residential flats, okay, on the unsold residential flats, okay, there will be a tax burden on the promoter or the developer. Okay, if there is any unsold flats, put it differently, to the extent of the sold flats, I repeat, to the extent of the sold flats, he will not have any GST burden. To that extent, it will be exempt. Okay, so this is another way to look at it. Okay, so on the unsold flats, there will be a tax burden on the promoter. Okay, and supposing if I say that it is a sold flats, that means sold before the cutoff date. This is how you should naturally understand. It has been sold before the cutoff date. Okay, in that particular case, there will be no tax burden on the promoter. Okay, if it is already a sold flat. Okay, in other words, to the extent of the flats, the residential flats only, to the extent of the residential flats, there will be no tax burden on the promoter. Now, when I say there is no tax burden on the promoter, it means that to that particular extent, it will be exempt from GST in the hands of the promoter or the developer. Okay, so now what you need to know basically is, that on the cutoff date means date of completion or the first occupancy, whichever is first. Okay, now in terms of the timeline, on the cutoff date, you should know how much is the unsold flats, how much is the sold flats. Okay, I mean these basic data that you should know it for the purpose of analysis. Okay, and unsold residential, sold residential, and others. Others means supposing there is any commercial units in this particular case. Okay, now others is basically anyway it's always taxable. So others basically other than the residential, whether sold unsold, treatment will be the same. Okay, so that is the data that you should already find out. Okay, so to the extent of the flats which are already sold, residential units, I repeat, to the extent of the flats which are already sold off before the cutoff date, that means on that cutoff date there is X amount of residential flats which has already been sold off. Okay, to that extent you will be exempt from the GST, and to the extent of the unsold flats there is a RCM charge. I repeat, there is a RCM charge on the developer or the promoter as the case may be. Okay, so that particular analysis, friends, I've already given it to here in particular theoretical form. Okay, so these are all exemption entries basically, and see, this is all entry numbers, exemption entry numbers at the appropriate places. I've already stated in my detailed class. I've already given it to you complete analysis of this particular point, but I'll just take you through this particular example. Okay, first of all, where there is any transfer of development rights, TDR, FSI, okay, long-term lease of the land, these are all specified transactions. Okay, any long-term lease of the land, this is all for the residential apartments. Okay, so you are going to get eligibility for the purpose of exemption. So including FSI is fully eligible for the purpose of exemption, except where the entire consideration has been received after the issuance of this particular cutoff date. Okay, so it means that if you have sold it before the date, then to that extent you are fully exempt from the GST burden with respect to TDR, FSI, or the long-term lease of the land for the purpose of residential apartments. Is that absolutely clear? And put it differently, on the unsold portion, because what is not sold means unsold portion on the cutoff date. Remember all this, that this GST tax liability burden is only on the cutoff date, and that particular cutoff date is completion certificate or first occupancy, whichever is earlier. So you will have on this particular cutoff date, you will have RCM, okay, on these particular development rights, TDR, FSI, and the long-term lease of the land, to the extent, I repeat, to the extent of unsold inventory on that particular date, you will have a GST burden. Is that very much clear? Okay. However, friends, if there is any long-term lease, of land for the industrial purpose, okay, so that is given a full exemption. This is your entry number this. So this is what you are talking about only with respect to the residential long-term lease of the land. And had it been a long-term lease of land for the industrial purposes, for example, state industrial corporations give very big lease of land for the industrial development, all those kind of transactions is given a full exemption in the GST. So for that there is no GST burden. This is your entry number 41. Okay. Now all these things, friends, can be summarized in form of a question, friends, which we had already solved it in our regular class. Okay. Now see, this is one of the full-fledged question which I already solved. That answer is there here, but just understand that particular mechanism and you will get the answer very quickly once you understand. Now wherever I said there are no sold flats or unsold flats, all the benefit of exemption is applicable only with respect to the residential accommodation. That is number one. Okay. Number two, friends, number two is that when I say sold, unsold, you have to consider its carpet area. You have to consider its carpet area. See, for example, if there is a one residential project, it does not mean that all the flats will be of the same size and the same dimension. So some flats will be bigger size, some flats will be smaller size. So that kind of ultimate total working has to be done based on the total square foot of the carpet area as terms of the calculation. Okay. So see, imagine this way, that in my particular example, this is my total carpet area. So this is a residential, okay, sold up to some cutoff date, okay, and unsold as on cutoff date. Okay, so I've given you, see, residential, and then the commercial. So all the variety given, the residential transaction given, property transaction, unsold, sold, all total data given, and commercial property sold, unsold on the cutoff date, total data has been given. Number of units is given, carpet area per unit is given, and the total square feet has been given. Okay, so how many flats, how many units are there? What is the size of that particular unit? What is the total square foot carpet area? That also total has been given. So while doing this particular matrix working, you will know the total carpet area. This is a total carpet area of that particular project. Okay, because this working has to be done basically that particular project wise. Okay, you have done that. Now out of this particular, how much residential accommodations which you have already sold before the cutoff date. Now this entire working is done from the promoter and the developer point of view. Okay, because for him only that RCM becomes a very huge and real good burden, and this tax liability will, friends, arise only on the cutoff date. So this all working is on this particular. So if you ask me that this tax liability is going to come on which date in the GST, on the cutoff date, that means on the date of completion certificate or the first occupancy, whichever is earlier. Okay, so whatever out of this total, the residential accommodation which has already been sold. So my total is, it's a very tiny handwritings, but let me read properly. I think it is 25,000 and some odd number. Okay, so out of 25,700 total carpet area, 10,000 of residential carpet area has already been sold off before the cutoff date, and the balance is unsold or it is pertaining to the commercial plots. Either it is unsold, that means residential unsold, or any other commercial plot, because this particular exemption is available or the RCM is not taxable, or you can say exempt as per the notification, but this benefit is applicable only for with respect to the residential accommodations. Okay, now it was 10,000. Listen very carefully. Okay, and total is 25,700. Okay, this is square foot multiplied with TDR or FSI or long-term lease of the land. Okay, now this much amount will be exempt in the hands of the promoter. See, this much amount is exempt in the hands of the promoter. So this will multiply with TDR, FSI or long term, because all the three transaction it has the same treatment. Okay, so that's the reason I'm saying. However, the technical entry numbers are different. Okay, so we multiply with TDRs or FSI or long term lease of land. Okay, so this is the equation, and to that extent it will be exempt in the hands of the promoter. And logic of thing is very simple, because this much you have residential units you have already sold, so full GST the flat buyer has already paid. No, because when you have sold it before the date, the customer has purchased it before that means the customer has purchased it under construction. That's the reason customer is paying the full GST, and that's the reason the promoter is given the exemption. That's the logic of the law. Okay, and so to that extent it is fully exempt. Okay, all other proportion, that means the balance figure, is fully taxable as RCM in the hands of the promoter. So on the cutoff date, that much reverse charge mechanism value will be subjected to the taxation in the hands of the promoter. Now only thing, friends, in the RCM, the affordable housing is given some concession. But let me tell you that GST rates is as such not required to be studied by us, because as such Institute has by and large stated that the rates of GST related provisions are not the scope of our study. So normally they should be giving us the rates of GST ready-made, that the rate in relation to this transaction is this. Okay, so whatever are your other transactions, but if it is in relation to the affordable housing, then there is a concession in terms of rate of the GST. Okay, and that's the reason I've given this particular breakup. So this much will be exempt. Okay, the balance will be taxable. Out of the balance, we again have to use the same proportion, because everywhere this carpet area proportion is to be used. Now, for example, if this much was affordable housing, okay, if this much was the affordable housing, okay, this is affordable, so this is also affordable, this is 500 is affordable, this is also affordable. So to the extent of the affordable housing, the RCM will be applicable, because whatever is unsold, okay, this is subjected to RCM. But in the RCM, if it is affordable housing, then to that extent the rate of GST is little bit concessional. That's the reason you have to take a different proportion. So this 2,500 square feet out of total 25,700, so roughly about what should I say, 10% or so roughly. So to that extent also it is taxable in RCM basis. See, it is taxable in RCM basis, but only thing that the rate is different. But this rate, friends, you need not worry. I think it will be ready-made printed in the question paper, but you have to classify that to the extent of the affordable housing, it will be a lesser rate of the RCM, but it is taxable in the RCM in the hands of the promoter. So basically what the government is doing now, and the same thing will be multiplied with the long-term lease of land also, so that I'm not repeating, because every working is the same only. Okay, so logic of the law, please understand, because now I'm going to put an end to this particular explanation. On the cutoff date, that means, say for example, completion certificate date is, supposing it's the relevant date. On this particular date, government wants the entire GST from that particular project. I mean, just think like that. Government wants the total GST from this particular project on the cutoff date, but partly it will be borne by the flat buyer. I mean, just imagine like that. Okay, so to the extent of the flats which the flat buyer has purchased under construction, okay, so the partly will come from the pocket of the flat buyer, and the partly will come from the hands of the promoter, but promoter will have to pay on the basis of RCM. That will be the difference. Okay, so on the completion of a project, the entire project GST government will take it, but to the extent of the sold flats, it has already come from the pocket of the flat buyer. That flat buyer pays that much of GST. Okay, and on the unsold flats, or on the commercial units on an RCM basis, the promoter, that means the developer, will have to pay. So basically, if the developer wants to save the GST, say for example, so developer will have to keep on selling the flat during under construction period itself. I mean, that's the logic of the law. So on the cutoff date, the total GST burden from that particular project will be basically shared by the flat buyer and the promoter, that is the developer or the builder of that particular property. That's all. Now friends, the next point which I want to take up for the purpose of quick revision is the analysis with respect to the housing society transactions. Now one of the entry number 77 friends of the nil rate notification, it says that amount up to rupees 7,500 rupees per month per member, where there is a housing society, basically what we call it as non-profit making organizations or something like that. So any services of unincorporated body, non-profit making entity registered under any law for the time being in force will be eligible for the purpose of exemption up to amount of 7,500 rupees per month per member. Okay. Now in this particular case, there are few clarifications by this particular circular. First of all, it is said that you will need to register to the GST if you are this particular housing society only if your total annual turnover exceeds the 20 lakhs and your per member per month exceeds 7,500 rupees. So only then, these are both the limits. Per member per month should have crossed the limit, and at the same time we should have also crossed the 20 lakh rupees limit. Okay, only then the registration will be required. If any one of the limit you are not crossing, then you are not going to be subjected to the GST burden when it comes to the housing society. Okay. Secondly, if there is any GST applicable, okay, in that particular case, the GST will be applicable on the entire amount. Now, supposing if you are charging 9,000 rupees per month, just imagine, and of course, you are crossing the annual limit of 20 lakhs of rupees also. As per this is 20 lakhs rupees basically means the GST registration limit. However, in some of the other states, it's a different limit. So if you want to say, don't just hang on to this 20 lakhs, I will just say that the registration limit, this is a default limit as per the registration chapter. Okay, but generally it is 20 lakhs. So I just took the example of 20 lakhs because some of the other state it is a different limit also. So that limit will be applicable. Okay. Now supposing if it is 9,000 per month, so you are crossing 7,500 rupees plus you should be crossing this default limit of the registration chapter, that is 20 lakhs. Okay, then you will be liable to register. Now when you will go for the GST will be applicable on the entire amount of 9,000 per member per flat. That means your GST burden is on the entire amount. So don't think that your GST burden will be only on the excess figure, which is above 7,500. So that will not be done. This is what the circular is clarified. The third thing, friends, will the society get the input tax credit? Because if the society is raising this particular money, then the society is also going to pay the money for procuring the services for the members, because ultimately society is but for the group of the members. Okay, so will it get input tax credit? It has said that yes, it will get input tax credit, all input tax credit on merits. So it will be all input tax credit as per the input tax credit chapter provisions. So in certain situations there is a block credit, so you block, but by default available credit you take the credit. That means input tax credit is available to this particular society also. Now the last clarification circular has given is, what if there is one member who is holding more than one flat? One member who is holding more than one flat. So will you consider this 7,500 rupees limit? Will you consider this particular limit of this 7,500 rupees per member per flat, or will you consider it only per member? So it has been clarified that if one member is having two flats or more than one flat, say for example, then the monthly limit will be calculated as per member per flat. Okay, so supposing one member is paying you 15,000 rupees, okay, but it is for two flats, so we will say that per member per flat is 7,500 into 2. So we will consider this limit for the purpose of calculation. So it is per member per flat limit which is to be considered. The basic threshold limit for the exemption purpose is 7,500 rupees per member per month, and that is what is to be translated if there is one member having multiple flats in that particular society, and accordingly you'll have to do that particular working for 7,500 rupees.